IFC's mandate is to promote private sector development in all developing countries. We do that through investing in private enterprise, whether it be by lending or investing equity. And we do that across the world, across the developing world. It's instructive to look at the share of our business that is accounted for by sub-Saharan Africa. If you go back 10 years, we would have invested we did invest about $100 million in sub-Saharan Africa. That was less than 5% of what we did globally. If you look at the last fiscal year, which for us ends on June 30th, so the one that has just ended, we invested across the world about $18 billion for our own account, of which more than 20% was in sub-Saharan Africa. In other words, about $3.5 billion. So in 10 years, we've gone from an annual investment commitment volume of 100 million to 3.5 billion. And if you add on to that, sort of mobilizing other people's capital alongside us in IFC investments in sub-Saharan Africa, the number is more like 5.5 billion across about 135 different investments during the last fiscal year. So I think the first message is that for us, sub-Saharan Africa is much more important for our business than it ever has been before. We have decentralized generally, but specifically in Africa, we now have 23 different offices. We have 3 regional hubs in Dakar, Nairobi, Johannesburg, but also 20 other locations as well. And we find that this is absolutely critical, particularly in 2 respects. One is on the origination side, in terms of being in the flow of what's actually happening in the marketplace, establishing relationships with entrepreneurs, with industrialists, with local government officials, with foreign investors focused on that particular market, with other private equity investors, but also, and almost more importantly, frankly, is on the portfolio side. So once we've made an investment, by being actually physically there, it is a lot easier for us to interact with our portfolio companies, add value to the extent we can, and really be much more aware of what's going on. What type of investor are we? We are a growth equity investor. We do not do controlled transactions. We are not a buyout fund. We provide growth capital for growing companies and ideally in growing economies. So the growth that we have seen on the continent over the last 10 years is obviously one of the driving forces to the increased opportunity we've had to actually put money to work in Africa. I mentioned some of the statistics about IFC's own account investing. What we decided to do about 5 years ago was create a platform to allow third-party capital to invest alongside IFC. And rather than doing it sort of deal by deal, as we've done for many years on the debt side, where we, in many cases, syndicate our debt transactions, on the equity side, we decided to set it up in the form of a classic private equity platform, GPLP structure, with a number of different funds that focus, each fund would focus on a particular sector or region. We set up that business now 4 years ago. That's the business I run. We've raised so far $6 billion of capital. We think this is a good start. We haven't yet sort of covered the waterfront in terms of IFC's business around the world, but what we have done is had an initial focus on Africa. So our first regional fund, the one that Suzanne alluded to a bit earlier, is a fund that focuses cross-sector equity and quasi-equity in both Africa and Latin America. The objective being roughly 50-50 between the two, relatively unusual sort of geographic pairing. We felt that gave us the critical mass to raise $1 billion fund, which is the size of the fund. And that fund is now about kind of 65% invested. In the same time, we have raised a fund focused specifically on the African banking sector, which does nothing else except invest in African banks. I think one or two portfolio investee companies may be represented here today. That has done extremely well. We think the banking sector is very attractive. I think we all know some of the statistics about the low rates of access to finance, but also just generally in terms of banking penetration within most African countries is still very low. So I think that, you know, from the perspective of any public policy makers in the room, what I would say is that whilst there's been a lot of focus on, in a sense, reining in banks in the developed world, trying to reduce leverage, trying to reduce risk-taking, it remains the fact that in the developing world, and particularly in Africa, banking penetration, as in other words, banking assets as a percent of total GDP, which is the traditional way of measuring that, is extremely low. It is very important for sustainable long-term economic growth to have deep local markets. But even before you get to liquid capital markets, you need to have a strong, robust banking sector that is able to finance growth. So we invest in banks, we lend to banks with specific criteria in terms of to which sectors those loans should be on-lent. And we think this is both a driver of future growth in Africa, as well as an extremely good investment proposition. In the meantime, if you want to get exposure to a broad cross-section of African commerce and industry. I'll leave it there for the moment.
Doing business in Africa. You can't afford to be without Africa Investor.